The US keep releasing strong economic data day in, day out. Their GDP and the home sales, which comes out last week, came out above expectation. So the US economy now grew at an annualized rate of 3.3% in the fourth quarter of 2023. Hello guys, welcome to Ambafx YouTube channel, where I bring you the latest insights in the world of forex market, the fundamental bias and the technical bias, and what is happening in the geopolitical environment. Do well to subscribe, like, and share this YouTube channel, and don't forget to drop your opinion in the comment section about your own perspective on whether the economic or the technical aspect. As we said, the economy grew at an annualized 3.3% in the fourth quarter of 2023, but the rate of growth is not pushing up the inflation. You see that the inflation is not rising. The inflation data is dropping. So the inflation data they dropped last time came out lower than expectation, whereas the GDP comes out better than expectation. So which means that the economy is managing to combine the tightest monetary conditions in decades, and the economic growth, and also the downward trend in inflation. So they need to manage the economy very, very well. So that's it. So all those data that were released, because previously they said they are going to cut rate in the first quarter of 2024, which is expected to happen in March. So all this data do not affect the expectation of rate cut in March, because the probability of rate cut is still close to 50%, but it's reducing actually. Before it's 78%, but with all these fundamentals that were released, and we have the boost in the economy, and we have the low inflation data report. So what we have to do is we should pay attention to the Fed in January 31st. That's when they want to drop their monetary policy report for January. But I assume that the rate might be kept unchanged this January. So that's after the monetary policy data report. Then we'll have Fed press conference. So that's when you will now say maybe with all this data they have, with all this information they have, they are going for the rate cut in March, or they will go for hike in the interest rate. So let's see what Fed will actually say in the press conference on January 31st, 2024. And if you look at the DSY, you see that it's this particular support level and bounce off. Last week I told us that we should expect more strength in the DSY, that is in the US dollar, and we just see this small retracement and market come back to hold the particular trend right there. So what am I looking at? What are we looking at? Right, if you check the moving average, we have the 200 moving average below this particular price, and then we have the 50 moving average close to this price in the weekly time frame. But if you check the daily time frame, you will see that the 50 and then 200 moving average is still at this particular area, which means that the 50 moving average is signaling strength, and also this 200 moving average is signaling trend, because if you check the weekly time frame, is below the price, which means that we might still see more push to the upside in the DSY, that is more strength in the US dollar. So probably this is where I'm expecting the DSY to hit in the next couple of days, couple of weeks. This is where I'm expecting the price to hit. That is 106,874. But if the Fed now announced that there will be a rate cut with all the data they have, there will be a rate cut in the first quarter of of 2024, which is March. That is 2 months away. Then we should see the US dollar probably decline from this area and break this low. So that is what we are looking at. And then let's check the individual currency. But before we do that, let's check the economic activities of next week. Next week on Tuesday, we have the US dollar consumer confidence. So US dollar is next week is a very busy week in the forex market, especially in terms of the US dollar and pounds. So that particular currency will experience a lot of volatility. That particular currency pair, that is a GBP USD pair, and then expect it in Euro USD too, but more volatility will be seen in GBP USD, AUD USD. Yeah, so watch the two pair next week. These are the two pairs you should expect more volatility in next week. On Tuesday, we have the consumer confidence out of the US dollar. On Wednesday, we have the AUD CPI, and then the trim CPI too. We have on Wednesday too, we have the US dollar GDP from employment change, Canadian dollar GDP, employment cost index of the United States, and later that day we have the federal fund reals FOMC report, interest rate report, which it is which the forecast is 5.5. So the market participants predict that the Fed should leave the rate unchanged in January, and that is what I'm hoping for to happen. I'm looking forward to happen. That is the Fed should leave the rate unchanged and make an announcement at the press conference. Either they are going to cut rate or leave rate unchanged or hike rate in the first quarter of 2022. So that will what is it called? That will increase the probability of the rate cut if it's going to happen, or it will reduce the probability if it's not going to actually happen. For now, the probability is still at 50% for the rate cut to happen in March 2024. And then on Thursday, we have the Bank of England. That is a BOE monetary policy report. And then market forecast is 5.25, which means that our market forecast for them to leave rate unchanged in January. Probably these people to actually leave their rate unchanged, as we actually saw in the ECB. That is in Euro, they leave their rates unchanged in January. Most of these most of these banks to actually leave the rates unchanged in January, because this is just this is the first month of the year. They do not want to do anything that will actually affect their particular currency negatively, because they need to have more data at their disposal before they can actually see that, because they need to have more data for the year. I need to put for the year at their disposal so that they will actually know probably maybe they are going to cut rates or probably hike rates, but I don't think they have enough data to prove that right now. So on Thursday, we have the unemployment claim and ISM manufacturing PMI. Friday, we have the non-farm employment change. So as you can see, next week is a very, very busy week in the forex market, especially in the US dollar and the pound. So GBP USD is the currency to watch next week, and then probably AUD USD to Euro USD to will experience a lot of volatility next week. Market is ranging since, and why market is ranging is because market participant has not yet decided what the economy is saying and then confirmed it. So there are still some discrepancy, but I think they have started gathering a lot of data now, and after this FOMC, everything will clear, and they will know exactly where they will actually push the price to go. So that is that about the economic activities. So let's go back to technical and see the individual currency where we are going to enter our positions. So I'm expecting a strength in the DSY. So if I'm expecting a strength in the DSY to at least 104.254, then we should see the break probably to 106 874. That is that if the Fed actually confirm that they are not going for rate cut. But if they announce rate cut, then we should see the dollar weak, and then we should see the break of this particular low, and then we should see market coming back to this low right there. So the first pair I want to check is gold. So as you can see, gold closes bearish on Friday. That is as a reversal pattern. So what you should notice here is that I told us last week that we should see gold coming back to 1975. So what you should notice there is that we have a break of this trend line, and then markets went ahead to retest it. And one of the things market did not do here is to break above this particular level right here. So market did not form any new high after it actually retest, and even at this area market didn't form any new high, because this candle closes below this one, which means that sellers are gradually stepping into the market. And if you look at the momentum of the selling pressure, you will see that it's even more than the buying pressure. If you look at the momentum of the selling candle, which means that sellers are very, very much around, and they might actually push drag the price back to 1975. So this is what I'm looking at in the next couple of days or couple of weeks, for sellers to drag the price from 2018 to 1975. So this is my target right there. So any adjustment you see is an opportunity for you to enter a short position to 1975, which is my target for the next couple of days or a couple of weeks. But if price now break above this high, then that is when I will be looking for a sell bias again. If market now break above this high, then I won't be looking for a selling bias. My bias will actually change to a buy bias, but markets price still stay below this particular level. So there's a higher probability, 80% probability, that sellers are still going to drag the price back to 1975. That is what I'm looking at. On GBP US dollar, you see that if we check the monthly time frame, I guess, the monthly time frame, see how the weekly time frame closed. It closed as a reversal pattern. That is this is what they call hanging man right here. That is the monthly candle, but it has not actually closed. So let's go to the weekly time frame. So weekly time frame, because we saw a lot of ranging markets around this particular area, and then if you zoom it further, you'll see that you'll see something very, very important here. As you can see, rejection, breakouts, come back in, reject at the particular area again, and then probably you should see rejection here coming back to the downside, hopefully. And if the strength continue in the DSY, we should see the GBP to the downside. And then all I'm looking at on GBP is a short bias to the downside. So let's see how it goes right there. So this is my safe zone right there. If you break above this, then I won't be looking for a sell bias anymore, but my strong bias is a bearish bias. So keep forward for GBP for sellers to drag the price back to 1.21060. So the next pair is on Euro USD. So I think sellers are still around on Euro USD, and I don't think they are going too soon. And if you check the momentum of the bearish candlestick, you see that sellers are very, very much around here. So probably I'm expecting a sell bias on Euro USD after price break this neckline to the downside. If you can see very well, you see that this is probably a head and shoulder, and then this neckline was break and what's retest. So probably expecting price to come back to 1.07467, and if this area break, you should see seller dragging the price to 1.05184. So listen to all of this, and then you have to pay attention to the price level. As you can see, I'm expecting sellers to drag the price back to this level. If it breaks them back to 0.1.0518 on Canadian dollar JPY, I'm expecting a buy bias because Canadian dollar is very weak. But this is what I'm looking at right there. There's a discrepancy here because probably we are at a very strong key resistance level at this area, and this is my safe zone right there. This is what I'm looking at right there. If price now break through this area and it break what I called 110382, then I will be buying CAD JPY. That is, I'll go for long on CAD JPY. But if we now have what is it called? If markets now reject this area to the downside, that's I'll be selling the Canadian dollar JPY back to 10900. So this is the area I'm looking at right here. These are the two areas, 110382 and 10203. That is that's 30 pips in between. So that is what I'm looking at right there to actually make my decision. But if it break to the upside, I'll be buying Canadian dollar JPY. But if I see a break to the downside, then I'll be selling back to 10900. So the next pair I want to check is the Euro JPY. So on the Euro JPY, what I'm actually looking at is a bullish bias. That is I'm actually looking for price to continue to the upside on Euro JPY. So after this level break to the upside, we have a break of this level. So price might actually come back to retest this trend line and reject. So I'm actually looking for a bullish move to the downside because on Friday the Japanese CPI comes out lower than expectation, and then we saw the boom in we saw the decline in the CPI of the Japanese currency. So I'm actually looking for a bullish bias on Euro JPY next week because if you check the Japanese dollar in the Japanese index, that is JPY currency index, you see that it's in a downtrend. So that is that about Euro JPY. So the next pair is AUD JPY. AUD JPY too. My bias is a bullish bias on AUD JPY. As you can see, price has break through this particular level and then as retest. So probably you might see the retest coming back to this area, and boom, we see the buyers coming back and push the price to 98039. So my bias on AUD JPY is to the upside right there, and we have the US dollar JPY, which my bias is to the upside too on US dollar JPY because we'll see the US dollar strength coming to the next week, unless we have another announcement that will actually validate this by the Fed. So let's see how it goes right there. So I'm on bullish buyer, and I've actually dropped this signal in the Telegram group. So if you're not in the Telegram channel, click the link in the description box to join the Telegram channel, and that's where we drop this particular updates, and then that's where I drop my entry every day. The next pair I want to check is pounds JPY. Pounds JPY, I have two buyers at this particular area, just like the Canadian dollar JPY. If you check this particular area, you see that we are in a very strong resistance level between 188 and then 188.216 on 188.520. So I don't know, but my strong bias is to the upside because the whole directional bias is to the upside. So you might just see price coming back here and break all this particular resistance right here to the upside. So that is about pounds JPY. So my bias is bullish bias. But if we now see it dragging the price and break this particular low right here to the downside, then I will be looking for a sell bias back to this area or to that particular support level. So we have a Euro AUD, which my bias to is bullish bias, because hopefully we should see this particular uh resistance level to break to the upside, because the whole market is to the upside, and then we see if this particular flag pattern, we see the break to the upside. On the Euro Canadian dollar, I'm on bearish bias on the Euro Canadian dollar, but if price now move above 1.46273, I won't be doing anything until price break 1.47 till I change my bias to a buy bias. But if price stay below 1.46273, I will be looking for a sell bias back to 1.43555. So guys, these are the weekly forex forecast, and these are my bias for the week. So pay attention to the Fed, pay attention to what Fed will say at the press conference in January 31st. That is where you see where the US dollar is actually heading to. And don't forget, our bot is still very, very effective. So let's check. You see that the bot has made 144% since it was connected. So that is since August 2023, and in 2024 it makes like 10%. So don't lose the opportunity. So from 5k to 12k, so from $5,000 to $12,000, that's the account balance now. So DM me on Twitter, the link in the description box, it's in the description box, or on Telegram, so that you can get connected to the bot or actually get the full license. So that is that about that. Don't forget to trade safely. Don't forget to use your protective stop loss, and then have a very good and lovely weekend ahead.